Good morning and welcome. Patriot Radio News Hour, Joe and Jason on this Thursday. I hope it finds you well out there. Quite the traumatic event unfolding in Florida. I guess, at the end of the day, I guess we could say it could have been worse. As Hurricane Milton went through. We'll wait and see, but the estimates probably going to be in the $100 billion plus range. Tropicana Field got their troop. You know what? They needed a new stadium anyway, so maybe that'll help them out over there. Hopefully, everything's going to be better than what we saw from Helene. We'll wait and see. We had inflation data out today, jobless claims data out today. We got gold and silver on the move. So many things to talk about. We're closing in on the BRICS summit. More countries announcing they want to join. Speculation is Turkey is going to be one of the new additions. We'll see how many. I think, Jason, we can see as many, another 5, 6, maybe even 10 countries joining BRICS. There's big talk about the payment system that is coming, and more talk again that this is going to be some gold-backed system. I'll just say this. Get your gold and silver put away before the summit. Just telling you. Do it before it happens. I don't know what they're going to say. We truly don't. But they've been leaking stuff out there in drips and drabs, and I think it's going to be, if nothing else, here's what we know. There are going to be more nations in it. They're going to be, once again, using something other than dollars. Yesterday, 2 days ago, we had one of the worst auctions ever when the foreigners didn't show up. Yesterday, we had auction off 10-year notes. Guess what? The foreigners showed up. They did. Well, kind of. Unfortunately, the auction was terrible because the foreigners said, okay, fine, you got mad. We didn't show up yesterday, and I'm sure Janet Yellen and Jay Powell, they're probably making all the phone calls. Hey, guys, what are you doing? So they showed up yesterday. Problem was they didn't want to pay anywhere close to what the federal government wanted to pay. The 10-year note now, almost a 4.1%. Why? I'll tell you why. It's real simple why. Countries want to hold less dollars. Have you not figured it out? I know, well, there's an election. There's a hurricane. So what? So what? You better wake up and realize what's really happening here. If you want to be a winner in this, because listen, a lot of people are going to make a lot of money on this deal. Do you want to be one of them? It's up to you. Gold and silver is the place to be. 800-951-0592. The website at allamericangold.com. And we'll start with jobless claims. They blew the doors off this week. We've been waiting and waiting and waiting, and who knows? It's only a week. Let's not get too carried away. But 258,000 first-time jobless claims. This is the highest number we've seen in quite some time, much higher than expected. And again, there's some reasons for it, right? We had the hurricane in North Carolina. I don't know that could help very much. We had the auto industry. By the way, I got a big update on autos. If we don't get to it today, we'll definitely get to it tomorrow. Heavy layoffs coming out of Stellantis. But Jason, not only did we get a huge first-time jobless claims number, continuing claims skyrocketed as well. So we had a really, I guess, this is kind of the first bad, I guess, if you will, we'll call it bad, jobless claims number, because not only did we get a big surprise on first-time jobless claims, there's also a big surprise in continuing jobless claims. What does that mean? Well, that means, I got laid off. And guess what? I'm still laid off. And I'm still laid off, and I'm still laid off. I'm still laid off, right? Not finding the jobs that they need or, the jobs that are going to be available. We'll see. This is, again, it's 1 week. I know this. Here's the problem, right? Now, this other hurricane, that's not going to help, right? This one in Florida. So, are we here? Are we starting here? There's other people, too, now, Jason, saying housing, it's going to get worse now because they were hoping, hey, we're going to have all these lower rates. Unfortunately, foreign governments are saying, no, you're not, because we're not interested in buying 10-year notes at 4%. We're not interested. We don't want it, right? We don't want to buy it there. We don't want 3-year notes at whatever, 3.8%. And all of a sudden now we're stuck in this thing where, is Florida going to lead a collapse in housing? We'll see. Interest rates aren't cooperating with the Fed. And at least for today anyway, all of a sudden, these jobless claims are now, that's getting serious.
That's a whole lot to take in, Joe. We'll talk about it more on the other side because, there's a lot of paths this thing can go, right? But it all seems to be all negative, doesn't it? It doesn't seem like it'd be a positive way out.
Yeah, that's the thing. We'll try to find something positive when we get back. 800-951-0592, Patriot Radio News Hour, Joe and Jason here on this Thursday. And again, the year of chaos continuing to live up to the billing. Let's not forget. Right, we still got the election coming up. We got the big BRICS meetings coming up. Israel says, "Hey, when we do it, it's going to be vicious." Talking about a strike on Iran and China this weekend. That's another one. They're going to come out, at least by what we're told. There's going to be a big announcement on Saturday. Another big bazooka coming out of China, which means what? Guess what? How do they pay for it? They're going to sell treasuries. I mean, that's how they're going to do it. Quick look here at the markets. The Dow is down, but it's under 100 points. The S&P, the NASDAQ, they're lower as well. As I told you, the 10-year note, 4.095. Let's round it up. We'll call it 4.1. Wow. Can you imagine? We cut 50 basis points. And the interest rates are actually going higher. That's not how it's supposed to work. Uh-oh. Remember, let's see, what happened a few weeks ago? Oh, that's right. The yield curve uninverted. The longest inverted yield curve in history. Let's see. Let's not go back and look at history, because that'd be dumb, right? Don't do that. No, why would we do that? That's just stupid. I mean, we've had these really long inverted yield curves before. And then when they uninvert, I wonder what happened. What happened? Well, let's see. We got the 87 crash. That wasn't great, right? Wasn't the end of the world, but man, it wasn't great. Put it this way: Japan never been the same since, right? Let's see, what was the third longest? That was the fourth longest, by the way. Third longest. Oh, that's right. That was the financial crisis. I mean, come on. That was fine. Who cares, right? So what? No big deal. Remember? Whether it was you, your neighbor, your buddy, your family members losing their homes. Yeah, that's fine. How about the second longest one? Oh, yeah. That was that thing now. None of us were probably, maybe a few of you are still around. Not too many. That was called the Great Depression. I don't know if you remember that. Of course, what happened? That was the big change in the banking monetary system. What do I mean by that? Well, we never really got out of the Great Depression until World War II. That's really what happened. And, of course, Bretton Woods and everyone had to use dollars. Here we are now, the longest inverted yield curve. So I just went through. Here, it's the top five. 5 longest inverted yield curves. Every one of them ends with something bad. Not my fault. That's just how it works. But somehow it's going to be different this time. We're talking about World War III. We're talking about this BRICS summit. I don't know. I'm starting to just put dots together. I know I'm crazy. Am I? Crazy like a fox. You think maybe, just maybe, they're getting ready to do it all over again? Right? Reset the stage. Sure looks that way, doesn't it? Right? Bond markets aren't supposed to do. Fed cuts rate. Not only did they cut rates 50 basis points, they've also said, hey, we're going to keep cutting them. They've said it. Now, they may not go 50. They may go 25, wherever. Right? The little dot plot charts, remember? Oh, we put these dots in here. We're going to keep lowering the rates. Didn't you know it's not supposed to be doing this? Bond yields aren't supposed to be doing this. Wake up. Get ready for what's coming. It's easy. It's not hard. By the way, crude oil rallying again. I got a feeling this Israeli strike, it could be this weekend. You know, it's just interesting to see crude oil up $2 today. Kind of indicates that may be what's coming. We'll see. Gold right now, it's up $16, $26.25. Silver bumping back up to $31. I keep telling you. Get ready. But you know what? That's not enough. All the gold and silver is great. It's great. You need to do it. You want to take and create a gold and silver IRA? We can help you do it. We can help you do that. But you got to be more diversified. Check out our friends over at YRefi. Why? Well, because you can get up to 10.25% fixed rate of return. That's not correlated to Wall Street. That's really the big key here. Fixed rate. Okay, what's fixed rate mean? It means doesn't change. What if this? What if that? What if? Doesn't matter. It's fixed. It's fixed. The next 90 to 180 days, I think it's going to look much, much different. If you've got $50,000 or more, you can use it existing. I'm thinking about it. You got an IRA, you got a bunch of money in there. Maybe you call up, you take some of it, roll it over into gold. You can roll it into gold. Doesn't cost you nothing. There's no penalties. You can do it easily. Call us. We'll do it. Then you get on the phone, call YRefi. Take some more. Put it over there. Do you get out of Wall Street altogether? No, that's not what we're saying. Be smart here. I mean, I just walked you through history. You know that saying, history repeats itself. It's never always exactly the same, but it's the same. The circumstance, well, there was this and that and this and that and this and that and this and that and this and that, and they were all a little bit different. Still ended the same. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. 888-973-3924. Jason, we got the inflation data out. It was hotter than expected. Now, it's funny, because if you just read it, inflation eased. Not really. The headline number, 2.4%, up 0.2% for the month-over-month number. Now, the annual inflation rate was 1%, 0.1% lower. When you go to the core, which excludes food and energy, because gas has gone down. It was up 0.3% month on month. That's 3.6% if you want to do the math. Now, year over year, it ticked up to 3.3%. So basically, here's what we got on inflation. The month-over-month numbers, hotter, but the year-over-year numbers were a tenth better, right? A tenth lower than they were the last month. But, Jason, in this report, again, it's showing inflation ticking up. And I'm going to say this right now. Thankfully, gas prices have come down. If it wasn't for gas prices coming down, guess what? We'd have a different story to tell. We would have hotter inflation now than we did then. And let's face it, I think we're a couple of Israeli missile attacks away from that being a completely different story coming into next month.
Yeah, and it's interesting how 2.4 is considered, how we're getting used to this new higher, even in the CPI, the higher number. 2.4, if you go back to the February of 2021 numbers, Joe, except for a couple of months, except for a scattered few months and a few months in 2018, 2.4 is higher than every month previous, Joe. Every month previous. They like that. They used to like that 1.6, 1.9 kind of range. Remember, Joe, the 2%? And the 2.4 that we got for the year over year number, Joe, it's higher than all the numbers previous, except for, like I said, a scattered few areas. And so if they can't get this thing lower than 2.4%, I don't know how they can claim victory. And as I've said and you've said just today, the inflation sure looks like it's coming back, and it's going to come back with a vengeance. And you watch out. The prices of everything are going to be extremely high. I saw one guy had a number, said that his tracking of food was up 79% just the last 2 years. 79% for food, Joe. I'm not sure. I didn't go dig deep into his show, but he had all these metrics, different places in the country. He wanted to produce a really good number. But if you think about it, Joe, you go to the grocery store and everyone talks about it, but go back to 2021 and you look at here, 2024, it is a lot more money just to eat, Joe. Just to eat. You have a lot more dollars. You need a lot more dollars just to get food in your mouth, Joe.
Yeah, and it's going to be interesting how all of this plays out as far as what's going to happen with the inflation numbers going forward. But again, I don't know that it matters. Right? We may be in a situation, think about this, if the foreigners continue to behave in the manner that they're behaving at these debt auctions, which is we're not going to show up, which was 2 days ago, or because you know what happened. Janet Yellen, Jay Powell, all these other, they were all on the phone saying, hey, what are you guys doing? Where are you? You know what? You do this, we're going to have trouble in these auctions. We're close already. And then they showed up yesterday. But guess what? They said, okay, fine, we're here. We're not going to pay that. You're going to pay us this. One of the biggest tails, again, remember, tails are bad. And so now we're in a situation where the Fed is saying we're going to cut rates. They're on a rate cutting cycle, and yet the bond market's going the wrong way. Oh, boy. The yield curve is steepening and steepening and steepening. We went 40-plus years where all of the yield curve did. I mean, it wasn't a straight line. It just went down. This is a different time. This is a different time. Think about this. Gold, they took some profits over the last few days, and I told you they would. I mean, it's not going to be a straight line. Gold should be down $100. Bond yields are up, right? Everybody wants more higher rates. Inflation's not really playing along. I mean, jobless claims wasn't very good. And yet, here it comes. And here's the other thing. So think about all the things that we got going in for the metals here. This BRICS meeting, what is it, 2 weeks away? Oh, it's going to be very, very interesting. Because if nothing else, we're going to have more countries in. We know that. How many? We'll see. Here's the thing. It's like 40 countries want to join. The BRICS is kind of like, whoa, hey, you guys can't all join at once. Calm down. But there's going to be a substantial amount. The payment system that's going to be coming on top of more gold buying, on top of less treasury needs, right? We just don't remember. We're down for every $10 of new treasury debt issuance. The foreigners have only been buying $1 worth. One. What if they buy none? Heck, what if they sell $1? Oh, man. Oh, yeah, that's right. That's right. Russia and probably other countries are going to create a silver reserve. Yeah. Giddy up. We'll be back. 800-951-0592. Patriot Radio News Hour. Cuba wants to join BRICS now. It happened. It's like a weekly thing now. Everybody wanting to get in there. By the way, where is it? I know I have. There it is. Is this another indicator? Do you know that there's a French fry king that is very maybe indicative of the economy? It's called Lamb Weston. They are the largest producer of French fries in North America, and they are a major supplier to the majority of the fast food chains. McDonald's, Burger King, these are the guys. They're the ones. I'm going to send you your fries. The company announced that they're going to lay off nearly 400 people and cut production due to slower demand. Jason, just another one of these indicators, right, that things may maybe get into this tipping point that we've been talking about. We'll have to wait and see, but I thought that was pretty interesting that the French fry king said, hey, the volume is not there, right? McDonald's, they're not selling as many fries. We got to lay people off. We got to cut production. Of course, we heard this Stellantis, the same thing. By the way, this is the first year ever that there will not be a single new car, that can be bought for less than $20,000. So, you know those little golf cart cars? That's what I call them, right? Right? Not going to happen. 2024, the first year ever that you cannot buy a new car of any make or model for under $20,000. And Jason, the car industry, by the way, Michigan had a big jump in jobless claims. All of that attributed to car productions being cut. The slowest selling cars in America, the Jeep Cherokee. The dealers are holding these things for 130 days. The price, just under $40,000, $39,000 and change. The Land Rover Discovery at $53,000. Buick Envision. All of these cars are on these lots for over 100 days. And look at the prices. $53,000, $39,000. Ford Mustangs, $56,000. A Mazda MX-5. That one's a cheap one I guess cheap now at $35,000. A Lincoln Aviator, 70,000. Can't sell them. By the way, one of the slowest selling used Teslas. The Model S. By the way, used Teslas now, $65,000. So, yeah, Jason, very interesting what's happening. You know what? Cars and homes are kind of going together, right? Which is they're too expensive to begin with, and interest rates aren't, you remember 4 or 5 years ago, you could get a new car loan for 0%. That's gone. Right? That's gone now. And now, even with the Fed trying to lower rates, they can't get out of them, right? Because guess what? The bond market's not cooperating.
I was just looking at it seems like these big industries, they seem to know what's going on way ahead of time, right? We talked about strikes yesterday, Joe, and the auto workers had that big strike last year. It's easy to forget the stuff, right? The auto workers knew. I think the big companies knew, hey, we're not going to sell a lot of cars next year. And the unions probably figured it out. They have guys in the upper management. They know, hell, we're not going to sell a lot of cars next year. If we're going to get something, we better get it now, right? So it makes you wonder with the Boeing strike and the dock strikes that are this year, they're probably, hey, we need to get something going now because next year, so for those industries, maybe next year is their bad year. So you're talking the auto industry, how are they going to, they're going to have to lay off workers, Good job for the strike, but we'll give everybody that's currently going to survive 2024 more money, but that strike of 2023, we'll just cut the fat, right, Joe? We sell less cars, we'll need less people to make them. So, if you're in a union, hopefully you're high enough up there so that when the next year comes around, they start slicing out employment, your head's above water, right, Joe?
It's going to be really interesting. The Boeing strike continuing. They're not even talking anymore. The at least temporary reprieve for the dock workers that they've agreed to. Hey, we'll take the 62% raise. It's incredible when you think about that. That's such an outrageous number, but is it? Because guess what? They're saying, hey, by the way, we're going to keep fighting. We'll go back on strike in January unless you promise us that you're not going to bring automation and take us out of these jobs. I mean, it's absolutely insane. How about UPS? By the way, UPS letting everybody know. You want to know where inflation is? I think UPS is probably a great place to look at because they announced today. By the way, prices going up. Prices are going up. A 5.9% rate increase that's going to take effect December 23rd for all rates around ground, air, international shipping, etc. UPS now, Jason, saying, hey, listen, inflation 6%. That's kind of what they're saying. And, of course, what? Well, we got to pay the drivers. These guys, remember, they got a new deal, right? The UPS drivers, they got a new deal. They're going to raise prices 6%. How about those of you on Social Security? Man, do they know how to screw all of us? I don't understand why the older population just doesn't rise up. I mean, they should be sitting out in front of the Federal Reserve. Forget about January 6th. They should be in front of the Federal Reserve building every single day. Guess what your cost of living adjustment is going to be this year? 2.5%. Yep. Congratulations. They just told you that the core is 3.6. Yeah, but you only get 2.5. UPS just said, hey, inflation's 6%. You're only getting 2.5. It blows my mind, Jason. It really, truly does. This is the storm. You know what? You know why people can't go to buy French fries anymore? Yeah, well, guess what? Their wages aren't keeping up with inflation. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Thursday. as we're kind of watching the world go round here. Economic data out today, not great. Inflation, okay, I guess the year-over-year number it went down a tenth, but the month-over-month number is not very good. But don't worry, the Fed guys were out saying, well, we shouldn't worry about the month-over-month. Yeah, okay. Well, we'll see how it comes out next month, but don't worry. They're going to make sure everybody's poorer next year than they were this year. The Dow's down 100 points here as the 10-year note continuing to rise as foreigners continue to elude the Treasury auctions. And when they do show up, they just want more and more and more. And, of course, the big BRICS meeting that is coming next week, I guess 2 weeks from now, I think is going to be another one of these big moving points as we look at where the gold and silver prices are headed. As you know, I've updated my gold forecast for 2025. I was at $3,000. It's going to be higher than that. Silver, I don't know. I'll start at 40. I'm going to start at 40. That's. I think it's going to be higher than that, but I'm going to be conservative here. I think we're going to see silver in the 40s this year. I told you this year we're going to see silver in the 30s. People forget. What was silver at the beginning of the year, Jason? Do you remember? Was it 25, 26, something like that? I mean, silver's $31 here. I mean, it's had a good performance. I don't want to call it a great performance. Most people would say, hey, that'd be a great return. I think 2025 is going to be a big opportunity in silver. Right now, U.S. Silver Eagles, $765, right? They were cheaper the other day, but this is what happens. Half dollar rolls to 60, quarter rolls to 50, dime rolls $125. Again, I've got an all-out buy on silver right now. And gold here, man. Gold is really flexing its muscle right now. We had I don't know, is it even really that big of a pullback? Less than $100, but it's something. We'll take it. But gold very comfortable in the $2,600 range, and now we're waiting for the next catalyst higher. But think about this. $20 gold pieces, I'm going to give it, you know what? I shouldn't do it, but I'm going to do it because it's important that you get more. If you don't have any, today is your day. $20 gold pieces, 1 through 9, $27.50. This will be the last day. I've got about 100. I don't even have that many. Probably 91, 92, 20s at $27.50. But here's the best part. You buy 10 or more, 27, 25. That's like $100 over spot. That's nothing. That is absolutely nothing, because my fear is in 3 weeks after the election, these premiums are going to go back to where they're supposed to be. And when that happens, add another $100 to $150 a coin just to get back to normal, right? Because right now, right at gold at $26.25, a 20 should be close to $2,900, $2,800 and change. And of course, remember what I told you: if it's Harris, yeah, we're probably. I could imagine premiums being $400-$500 over spot. That's probably what you're going to be looking at. Add to it, because even if it's Trump, so what? Or, I'm at $3,300 with Trump. With Harris, forget it, right? I'm going to have to reevaluate. Get it done. Did you catch the early part of the show, right, Jason? Right? The yield curve uninverted. The foreigners aren't there. They're going to show up even less next year. Get it done.
The year low price for silver is $22.09. That's the lowest it was. It opened the year at $23.75. So silver's had a 30%.
So.
Yeah, that's the year open, $23.75. It got as low as $22.09. 30%. It's up 30% this year. If you look at the average,
that it wasn't that great. Come on, that was pretty good. I didn't even realize that much. That's huge.
The only other year that comes close to, in recent years, that comes close to where we're at today on silver is 2020, the year of COVID. If silver was up 47.5% that year, 2021 silver came back about 11.5%. So over that period of time, you got about 35%. So right now, silver's doing as well as the opening years of COVID. And if it goes up again next year, it's better than the 2 COVID years, which is what you're talking about, Joe. The average closing price for silver has gone up every year for a decade. In 2015, it was $15.66. Then for a couple of years, it was at $17.10 opening the year. It did dip down in 2018, the average closing price at $15.71. But then every year after, $16.22, $20.69, $25.14. It did dip that one year in 2022 down to about $22. Then $23.40. The average closing price this year is $27.41, but that's because at the beginning of the year it was lower. So we're going to have an average closing price of above $30 an ounce for 2025 or more. So it's moving the way it's supposed to move. This is not the housing crash, and we don't have a $29 trillion buyout of countries and banks. So gold and silver will continue to go up. It's not going to have an overbought situation where it comes down, Joe. It won't happen this time, not currently.
The premiums are too good to miss. We should have every line open or full. I mean, I should be saying there's not even a line open right now. 800-951-0592. Jason and I will be right back.
It's that time.
800-951-0592. Patriot Radio News Hour. Joe and Jason wrap it up this Thursday. Like I said, the data today, the inflation number, hotter than expected. As far as the month over month, did tick down a tenth year over year. The COLA adjustments for those of you on Social Security, it just sucks. It sucks. I feel bad for you. Right now, gold up $16, $26.25. Man, you can buy $20 gold pieces, $100 over spot. It's insane. Just insane today. 1 through 9, $27.50. 10 or more, $27.25. Silver's up, 47 cents now, $30.95. As Jason said, silver started the year at $23.75. So I know gold's had a great year, but hey, silver right next to it. Little brother in that far behind. And like I said, all out buys really everywhere because premiums. It's all about premiums. When this thing starts to unravel, people get nervous, people get scared. All of a sudden, premiums go through the roof. Now, all of a sudden, instead of paying $100 over spot for a 20, you're paying $400 or $500 over spot. Why? Don't do it. Do it now. Silver. We know silver premiums have gone all over the map. They've been high. I mean, at the peak, I was paying $14 an ounce over spot for a silver eagle. Remember, I was on the air telling me I'll buy silver for $10 over, right? They're all gone right now, at least for right now. Jump on these things. A case of silver eagles, $19 grand. $19 grand right now. Rolls, $7.65. $50 rolls, $2.60. Quarter rolls, $2.50. Dime rolls, $1.25 at 800-951-0592. And more reports now that Saudi Arabia continues to secretly be buying gold and have huge increases in their gold reserve. Here we go again, Jason. Right, we're talking about all of these countries deciding, hey, we rather hold gold than fiat. Whether it's dollars, euros, whatever it may be, yen, whatever it may be. This is what you need to do. Be your own central bank. Listen, is this going to be the one time in history that when the yield curve, after a record yield curve inversion, that it doesn't end badly? That'll be the first time it's ever happened. I guess it could. Right, Jason? I guess it could. It's never happened before. Why would it happen now? By the way, did you see that one guy, I don't know, this one guy, he claims, and I guess, I don't know, I'm too lazy to verify. He's called every presidential election for the last 10 elections, including the Biden win and the Trump win over Hillary, right? Both of those. He came out today and said, it's going to be Harris. I don't know. I hope that's a bunch of BS. But, hey, guys, 800-951-0592. Get it done. Don't wait. This is the best time to buy gold since COVID, period. Best time to buy silver since COVID, period. Jason and I, we're going to be right back with the half.